So how can you get the most bang for your buck by choosing the right market to operate this midterm rental insurance strategy in? How do you pick that market? In this video, I'm going to cover how you can actually use these 5 pillars to identify the midterm rental insurance market that you want to start this operation in. So in this order, it's very important that we understand that the fundamentals of real estate do not go out the window. So I'm going to start with number 1, and it doesn't change. Number 1 is still location, 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 which you've heard before. It's nothing new, but what are you going to do with that? So when you think about location and picking location, and actually I have a great resource. If you go to, I'll make sure I put it in the link below. There's a great article that realwealth.com puts together on the 25 best places to buy rental property with respect to the year. Make sure you click and read that. They generate one every year, and it's phenomenal because they do focus on these pillars. And the number 1 pillar in this, how do you pick your location? 1 is you look at the job growth. Number 2, or I should say 1A, call this 1A. 1B, you look at the population growth, pop growth. Obviously, we want all those to be on the upside. And then last but not least, you look at affordability. And that's more of this for you because you want to be able to say that, part of the reason why we started work in Atlanta investing long distance is originally in Georgia is we were residing in some of the most expensive markets, right? New York City. I know folks in California, etc. That was the market that we were in. And so we said, where can our dollar go further? And that's how we found ourselves in the South. That was a big pillar. 1C, affordability, right? Population growth, job growth. That's what defines the importance of finding the right location for those 3 things. Now, once you've done that, because we have a very specific strategy that we're looking at, once you've identified that marketplace, one of the things you want to do is you want to look at the STR regulations. So you can type in, blank city regulations, short-term rental regulations. Why am I doing this? Because you're now in the furnished accommodation business when we think of the midterm rental insurance strategy, which is essentially when you have a home, as you guys know, it is fully furnished, our sweet spot. I will get to that number in a second later in the video. But we're talking about a single family home that is fully furnished, and should damage happen to that home, and should a tree fall onto that home, or should a pipe burst, what happens is we work with the insurance company that helps the displaced family find an alternative temporary solution of a home that's just like theirs in the neighborhood. And because that home is fully furnished, because that home has Wi-Fi on, because that home has great amenities like, stand-up desk, has a smart TVs, has a grill, anything typical. Again, not luxury per se, but functional. If you're currently getting value from watching this video, you'll want to make sure you take a second and click below to grab the midterm rental insurance blueprint to help accelerate your process in being able to land these midterm rental insurance contracts with respect to your marketplace. Make sure you click the button below and grab it and continue on with the gems in this video. They're able to move into that home, ideally like fenced in backyards. They can move in with their dogs temporarily for the next 3 months while their home gets repaired. And while that home is getting repaired, we're charging them a premium. So we're talking about a 3 to 4x traditional market rate, right? Traditional as in long-term rental. And it's already fully furnished. And the reason why we want to make sure we factor in the STR regulations is because the STR regulations, if, we get a 3-month stay, which we've had, 6-month stay, which we've had, 8-month stay, which we had, and by the way, typically they always start with 1 month. We know that it's going to extend due to unforeseen permits that need to be pulled, unforeseen labor, contractors, etc. So we end up, and when I say we, the insurance company, right, we'll call that State Farm, right, is paying us, the landlord, top dollar to temporarily locate this family, because the alternative would be a hotel, which is not only feasible for that family due to their size and their lifestyle, but also way more expensive than the premium that they're already paying us. So therefore, when we're thinking about our buy box and our criteria, we really want to focus on location, number one, fundamentals, real estate, don't go out the door, but STR regulations, number two, because if we don't have a contract in place in the interim, sometimes there's a gap between when you're transitioning from one contract to another. We still want to be able to do Airbnb. And Airbnb, as you guys know, another lucrative, you can make 3x traditional rentals, if not more sometimes as well. But now we're playing we have two opportunities, and that's what we want to make sure we're in STR friendly markets. I do not like it if you're trying to do the strategy and regulations are against you, which means you can't do STRs, or there's a 30-day minimum, or your HOA won't let you do this. I don't like that, right? We want green check marks across all these. So therefore, this is green, check. You're in a good location, job growth, population growth, affordability, amazing. Number two, air regulations are in your favor. You got to get a permit. You know the procedure. There's no cap. There's no wait list. Great, check mark. As long as you play by the rules. By the way, don't mistake STR regulations for you having to get a permit being a reason why you shouldn't get it. No, for me, I like it. There's a barriers of entry. There's a process behind it. Eliminates those who are lazy. Okay, so go through that process. Just make sure that it's in your favor, and do regulations change, and will there change possibly in the future? Absolutely. But again, you're still factoring in for the interest of your now, based on the information that you know, going with regulations as friendly. When they change, we'll address those if we need to, just like we adjust for anything that our lovely politicians do, as they often do. With that said, okay, great. So once you have the STR regulations, once you've identified your location, then one of the things you want to do is you want to use airdna.co, because not all, just because it's STR friendly, doesn't mean that the numbers are actually going to cash flow the way you want them to, right? So we go airdna.co. Now, I don't know everyone's situation with respect to their marketplace, but I know that I definitely, if my overhead is $2,500, I want to be bringing in at least gross double to 5x that, or I shouldn't say double, that's a big range. So I should say anywhere from 2 to 3x that, so that I know I have my mortgage covered on STR, and I know I'm going to get a premium booking which just surpass that. So understand where your numbers are. If your mortgage currently for this property is $2,500 and AirDNA shows $2,500, for me, that's a little too close for my liking. I don't like that. That's probably a no deal, right? So you want to make sure that there's a big spread when you go on airdna.co. Now, airdna.co is a data, basically data that's been aggregated of performance of how Airbnbs perform in that specific area with respect to your type of property that you pick, which is my next point. Great segue, right? Property that you pick matters, because the AirDNA numbers you see will change based on the property type. What does this mean? It means you have to have a buy box. Having the right buy box is what's going to dictate and help you understand at least where you should be when you think about, what kind of asset you should get, which, if you ask me, that's what I focus on before I focus on that, right? If you tell me, hey, when people ask me, hey, will this work in this specific area? The truth is it does. What I'm most concerned about, what I think is one of the most important things, is the type of asset that you buy. A 2-2, which is a 2-bedroom, 2-bath, is different than a 3-2 and is different than a 5-3, right? Very different products, and you'll get very different numbers on airdna.co. Now, I obviously understand that there also might be different price points, but sometimes that's not a huge swing. Like, you could be in a market where a 3-2 and a 5-3 is only a $50,000 difference. It's worth for you to leverage a $50,000 mortgage or loan to get a bigger product, because if it also means that typically bigger gets more people, they can host more people, which means you'll make more money and your numbers will factor in. It's also very important. Sweet spot solves a bigger problem in the insurance space. So my sweet spot, when I think of my buy box, which I'll go through for you, my buy box is 4 to 5 bedroom plus. I want to have garage, master on main, fenced in backyard, no carpet. I want a back deck. It's great for entertainment. It's good for Airbnb, especially when you're doing it in interim. It's also great for long term when people have a backyard. I want to make sure that I have basement if I can, and it's ground level basement so you can access floor level access basement, because in the future I can always turn this asset into a duplex, right? Those are some of the big criteria that I focus on. I want to make sure that if I can, if someone can live on one floor, so if it's a bungalow, that's perfect, because again, I'm thinking about being ADA compliant, which is thinking about those folks who have disabilities, who are unable to, instead of needing a ramp, maybe there's just one lip that they can get across and they don't have to use the stairs if they don't have to. So washer, dishwasher, all that, can that be on one floor? Great. If the bonus rooms are upstairs or downstairs, that's fine. But could someone actually live there? This is why I say master on main without accessing the basement or the upstairs. We've had multiple individuals and families that have needed that. Is there a work from home space? I like that. That's helpful in this day and age when there's a lot of remote work, right? So when you think about these things, these are all things that I factor into my buy box, and this is why I would always go larger, okay? And then last but not least, I use this website called Area Vibes. AreaVibes.com helps me get a score. I don't do anything less than a 69 because I want to be in an area that I would have my own family stay there, okay? 69. So you want to look at the, crime, you want to look at the livability, walkability, drivability at schools, etc. Just gives me a good pulse. It's not the end all be all. Take it with a grain of salt. Sometimes these numbers can be funky, but it gives you a good sense. Another thing you can do, a little bonus, is do Google Maps walkthrough. How does the neighborhood look? Would you stay there? Would you and your family stay there? Would you lock up all your doors? You should always lock up all your doors. But if so, if you got to ask yourself these questions, it's probably not the area where you want to operate this kind of business, because it's a family-oriented business. And, our goal is to serve families and make sure they're comfortable. So if you wouldn't buy it, if you wouldn't stay there, don't buy it. And that is my 1 through 5 buying criteria. A criteria that we're going through right now as we're looking to expand into another state. We always think of location. What's the job growth, population growth, affordability, STR regulations, airdna.co, and areavibes.com. By the way, for the location one, check out realwealth.com. That's a great plug, and it'll help you. Realwealth.com. I'll drop the link in there, and you can look at the top 25 markets and why with respect to job growth, population growth, and affordability. All right. Make sure it's all about finding the right asset type and solving a large enough problem to increase your occupancy and profitability for the investment that you've made. We'll see you guys next time. And make sure if you got value from this, grab the midterm rental insurance blueprint by clicking below. And there's plenty more of resources to help you maximize on your investments, co-hosts, or properties that you manage. If you got value from this video, make sure you click our next video, The Truth About Midterm Rental Insurance in Your State.